Hi, this is Wiley Sharp with Dennison Yachting, and today I'm doing a video with Noelle Norvell from Luxury Financial Group. She and I have been talking about doing this video for quite a while, and I'm really sorry. I'm the lazy person here who's not come around to do it. I'm here in Fort Lauderdale now. She had time. I was able to kind of make it work with my morning too, so here we are. I know a lot of you guys have questions on marine lending, and I get those questions a lot. A lot of you guys have already talked to Noelle. She's one of the absolute best in the business. Started working with her maybe like a year and a half, 2 years ago, and she put together what I thought was an impossible deal on a foreign flag boat in Dominican Republic, going into charter in the BVIs. It was like the absolute no way in hell.
I think we had 4 owners.
Yeah. I mean, it was just like, it was one of those crazy situations. But anyways, you also might recognize Noelle from Below Deck, where she was a guest star. Can't do a video without kind of mentioning that.
Sure.
And anyways, before we kind of get into talking about marine lending, why don't you let us know a little bit about your background and how long you've been doing this and that sort of thing.
Okay. Thank you for having me. So I started my banking career back in 1993, and I was a private banker for a well-known bank which has now been acquired by Wells Fargo. So with that, in the banking world, they train you in commercial lending, underwriting, consumer lending, mortgage lending, securities. I had my Series 7, 6, 63. I have my insurance license now. So I'm very well rounded, fortunately, with a good banking background. And from there, I got into the marine finance business exclusively in 2000. And since then, I've been doing yacht loans and have become very well versed. We're client and broker first. We want to make sure that the client understands the process in the beginning, and also how to get into the boat that fits their profile, because they have other things that are going on in their life. They have a mortgage, they've got a couple kids, maybe in school, maybe somebody's going to college. So rather than just looking at the transaction, we become their partner in the transaction and their overall profile.
Okay, that's awesome. That's perfect. That's a really good description. And from what I've experienced in working with you, that's exactly what I've seen. And I think a lot of my clients would agree with that too.
Great.
So I'm going to have all of Noelle's contact details in the description down below. We're going to be going through a fairly long list of questions. So I'm going to do something a little different that I haven't done in the other interviews, where I'm going to actually put those questions in the description, and then I'll put a little timestamp next to them. So if there's something you want to fast forward to, it'll make it way easier, because this is going to be a fairly long video. So anyways, let's go ahead and jump right into it. So one of the questions or one of the comments people always make on websites like Cruisers Forum, on Facebook, cruising or sailing related pages, people always make the comment, if you have to finance the purchase, then you can't afford the boat, or you shouldn't buy the boat. Now, I completely disagree with that. I think you probably would disagree with that as well. I know that we always get haters on the channel too, so I figured we would just nip this one.
Get it right
in
on
the
out
bud.
there.
Yeah, right in the bud. So
absolutely.
when you have somebody that makes a comment like that, what's kind of the counter to that, and why does financing a yacht purchase make sense versus using your liquidity to make the purchase?
And that is a great question, Wiley, and we do get that question quite a bit. And what the counter to that is that cash is king. So the boat is a luxury asset, and what financing a yacht does is it allows you to take your cash and keep it in investments. You can buy another commercial building, you can buy another investment property, or you can keep it in the investment portfolio that you currently have. And 80% loan to value, which most of our loans are, allows you to keep quite a bit of that cash. So really, with rates being as low as they are now, or even if they crept up a full percent, you're still getting a significant low rate. And let's not forget the tax advantage, of course, talking to your CPA. So your tax equivalent yield after your interest deduction could make that rate even less after the write-off. So what our clients do is, and to be honest with you, we probably have 50-50. Most of our clients don't need to finance, but they choose to. And then the others need to go ahead and finance. But that is why they decide to go against the collaterals, because they want to have their cash on hand for other investment opportunities.
Exactly. Yeah.
Yep.
Couldn't agree with that more. That's why I always try to explain to people. You just did a much better job than I did explaining that.
And the other thing that I didn't point out is that we partner with lenders who have very low or no prepayment penalties at all. So the longest prepayment penalty we have is 12 months. So if you call me up and say, hey, Noelle, can you shoot me off a payoff letter, where to send my wire 18 months from now? No problem. Happy to do it. We stay in touch with you pretty much, before, during, and after. And then, so we're happy to send it, and you can send the bank the payoff letter. So you're not married to the loan, so why not?
And I know, like in I don't know if we've had a situation like this yet, but I've had plenty of times over the years where people have purchased a Catamaran, and they were coming up on retirement. They were going to sell their home, blah 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 blah, blah. And they hit that point where they're like, okay, cool, the house is sold, we're going to pay off the loan, we're going cruising, that sort of thing. So it gives them a vehicle to kind of get going. And we'll talk a little bit more about buying a boat, owning property versus not owning property in a minute, because that's definitely one of the questions. So another thing that wasn't on the list I sent over, and I do this every time I interview my wife, I throw in questions that I didn't tell her ahead of time I was going to do.
We'll see how I do.
This is actually a really simple question, and a lot of folks that watched the original video asking for questions that they want us to answer, they'd like to ask is, what options are there? What can you do as a lender to help a either Canadian citizen buying a boat here, an Australian citizen? I mean, I get that question all the time. I know you do as well. I mean, as a Florida-based lender, what options are there if you need to help or you try to help an Australian wanting to buy a boat here, or Canadian buying a boat here?
Well, the first thing I'll tell you is that we need to be honest and upfront with the customers. And that's what we will do here, is that there are avenues for permanent resident aliens with green cards, with permanent resident cards, 5 years in the credit bureau, and 2 years of valid tax returns. And there are also avenues for foreign nationals who have none of that. Now, the trade-off is going to be the interest rate.
Right.
And that is the conversation that we have. And I have it, like Wiley said, I probably have this conversation once a day. And when they say, well, I want the rates that conventional marine financing gets by providing you nothing, we have to say, with all due respect, how will the bank recoup their funds? What comfort are we giving them? And asset-based lending, just by giving them the boat, is not a lending vehicle anymore after 2008.
Right.
There's no collateral-based lending. We do have to have a first source of repayment, a second source of repayment, because in the end, the banks don't want to have to repossess the boats like they did, about 10 years ago.
Right.
So we do have those avenues. We recently closed 4 deals, one for a gentleman out of Abu Dhabi, one for a gentleman out of Mexico, another one out of Canada, and then another gentleman who had moved here and was literally in the midst of getting his green card. We got the bank to fund the loan and then got the actual green card a week later. So the client was patient. He understood the process. If you've got those variables, we do have to jump through some hoops. So the client has to partner with us because it's a process. It's not overnight.
Right. And I think the important takeaway too there is if it's a more complicated process like that, there's more risk for the bank, which means you're not going to get as good of an interest rate, obviously.
That is the takeaway.
And you have to kind of understand that. I know we've always had those conversations with clients that all want the lower rate, but because of different situations, unfortunately, they have to go with the higher rate to be able to fund the loan, and it just is what it is because the banks look at the risk associated with the loan and
what their return on their investment is. So they look at their ROI. Just to give you an example, we did have a client who called us about 3 weeks ago and said, hey, got your name. So I gave him the parameters, telling him about private equity and the higher interest rates. He said, well, I have someone who said that they could do the loan just on bank statements. Fantastic, sir. I'm thrilled. I hope it works out. And that is not something that we will pursue because I am not aware of any avenues that are out there that do that. But I did receive a phone call from him yesterday. Unfortunately, that did not work out. So now he is back with us. So what you can be sure of is that we'll let them know the information up front and welcome them back if it doesn't work out.
Right.
But it would be great if they, just stuck with us at the beginning. It would relieve their frustration.
Right,
But we
exactly.
understand. We understand that they
Yeah, people are going to, shop around and they might have a friend of a friend.
Of course.
And, those sort of things. But, okay, cool. Well, those first two questions were kind of the more difficult ones, or the more obscure questions that you get all the time, I get all the time, and you guys asked when I posted that video last week. So the next thing I want to talk about is a lot of my clients are nearing retirement. They want to go sailing. They're going to finance the purchase. Like, if you're coming to that point in life where you're nearing retirement, you're thinking of selling the house, what is the smoothest way to secure lending before you hit retirement? I mean, should you wait till after you retire, then try to get the financing and buy the boat? Should you do that in the last year? I mean, what's, in your experience as a lender, what's the best process there?
And we've had this application before, during, and after. So the best time to do it is prior to retirement. And we had a client, gentleman came to Wiley, he came to us, and he owned his own financial firm. And he knew that he was going to be selling his firm 2, maybe 3 years from now. So we talked in depth about how he was going to do that and how his catamaran purchase was going to fit now versus 2.5, 3 years from now. So he wanted the ability for it to derive a little bit of income, which income on catamarans is offsetting expense. And then when he was ready to retire, then he would be able to use it full time. And in that, he does have a home, and he will continue to have that home. But then when he retires, he will have a condo somewhere else, because he'll be an empty nester, and it will just be he and his wife at that time. So the benefits of doing that is he currently still derives an income, which the bank is looking for, a primary source of repayment. He still has a home in the U.S., so it shows that he's got a primary residence and it is not a liveaboard, which are the criteria that the banks look for in regards to a boat. And the reason why liveaboards aren't something that lenders are excited to finance is because if you live aboard the boat, like let's say Weil and I live on a catamaran, we can take that bank.
My wife would not like that, by the way. That would be
simply for example purposes only. And we could take the boat and we could sail away. And if we don't have any commitments to the U.S., basically, there's really no reason for the collateral to return. And that's why the bank feels like it's not a good investment.
So that brings up kind of that segues a little bit into the next question then. I know lenders obviously like seeing property owners. If you don't own property, you want to buy a boat, and I know you've helped a number of my clients that don't own property over the years. What does that look like? I mean, there's some more hurdles there. I mean, what can you buy a boat without owning property?
You can buy a boat without buying property. We just took care of a couple of younger clients who had put themselves in a position where they didn't have to own any property. We were able to explain to the lender that they did have employment commitments in the U.S. and they were able to work remote, and that they did have a home that they rented, and that they had a home where they also spent time in, so about 6 months, and that the boat was definitely not a liveaboard. We were able to confirm where it was and that it was not going to be that, but just a few more hurdles. So we had to get employment contracts in addition to tax returns to show that, she in particular had the employment contract, and then his information, a letter from the employer in addition to his W-2 and his pay stubs. So you can still rent, which is totally fine, and then the driver's license had the rental address, and those are other things that tie them to the U.S.
So it's not, so obviously owning property is nice and banks like that.
That's true.
But as long as you live like in the U.S., you've got a fixed permanent address, you get a rental, they'll look at that and say that's strong enough ties to the United States.
That's correct.
And still loan on that boat. And
with other additional things, good credit and good liquidity, which these borrowers have.
Right.
So if you skinny up a deal like that, meaning that there's credit in the 600s, then there's no liquidity after the down payment, and they rent, that's going to be a little bit more of a hard sell.
Okay. So you just brought up something that we were going to talk about, but you mentioned credit score. What are banks and lenders mostly looking for? Obviously, the higher the credit, the more liquidity. I mean, that's pretty obvious.
Ideal, right?
Right. But if you're buying a $500,000 Catamaran, as an example, like what does a lender want to see to consider you a qualified candidate for that purchase?
Great question. We get this a lot because most clients can attribute car loans to the same as yacht loans.
Right.
And that's not a good parallel. And the reason for that is that a car is a need and a boat is a want. So the lender...
You mean a boat's not a need?
Well, it is for us.
Man.
It is
Sorry.
for us, I know. So in regards to that, maybe a 720 score is good in car lending, but in luxury lending, they look for 760 and above. Now, can you get a loan 720, even 680? Absolutely. We provide those avenues because of our in-depth banking relationships. But that 760 number, that 800 number is what they're really looking for. But you're an entrepreneur. Let's say you use your credit. You have multiple vehicles that they pull your credit. You're a personal guarantor for. We totally understand that. And what we do is we explain to the lender in advance as we say, okay, they use their credit. There's no derogatories on here, but these 5 vehicles are under their name as a business guarantee. You can see through the P&L that they pay the business, pay it through the business. And sometimes even there's a hiccup because the controller forgets a payment or two. As long as we can explain that it didn't happen all the time, it happened some of the time, then we can work through that. So it's a delicate conversation that we have with the customer. We try to get some camaraderie on the telephone first and foremost before jumping into credit because it is such a sensitive issue.
Right.
And we talk about it openly. And one of the big things I probably should have started off with is that we're really confidential. And I tell people that even though I may have received their information from Wiley, that none of their financial information is ever going to be shared with the broker. And if they're approved or denied, that's information that they share with him, and that's all they know.
Yeah, that's pretty much it. Yeah, exactly. Yeah, no, you've never sent me anybody's tax return. And,
no,
and I don't think I would even want to look at a client's tax return.
Yeah,
I mean,
and we're here to get to the closing. That is our job.
Right.
We are here to be a conduit to the closing. We are here to support the brokers. And we want to make sure that when we get to the closing, we've always referred to Wiley as the Catamaran expert. Everything in regards to the survey, the closing, the acceptance, all of that is in his wheelhouse. All the financial stuff is over here, and we never mix the two.
Yeah, exactly. That's very, very good point, worth mentioning. Okay, so we talked about credit score. What about like debt to equity? I mean, what do banks like to see in that regard?
So this is a moving target, as is everything.
It's worth mentioning that all these are just broad stroke general guidelines because every situation is unique and different. But
these are good benchmarks.
Right, exactly.
Right.
So in general, like what is a lender looking at for like debt to equity on a prospective lender or borrower, I should say.
So when you take a look at luxury lending, you've got a payment to income, which means the actual boat payment divided by the monthly income that the borrower shows. They like that to be around 15% or less. And then total debt divided by the monthly income number is 45 to 50%. Now, that additional 5% can be a couple things. It could be, hey, we've got a lot of money in the bank for this borrower, so we feel more comfortable with the debt to income. There's not a lot of money in the bank, so we're going to take that 45 and scooch it down to 40%.
Right.
So that's how they can manipulate that number. And credit score, let's say the credit score comes in at 680. You're going to go from 45% maybe down to 38%.
Right.
And those are the way those numbers can change.
Okay.
And debt to income is really one of those numbers that you can't get over. It's a number that it's black and white. It's addition and subtraction.
Right.
It's one of those numbers that you just can't mess with.
Right.
And we can do a lot of different things with some other aspects of the client's profile, but when it comes to addition and subtraction, that's accounting.
So it's almost looking at that number is almost more important than looking at a credit score as an example. Equally important because you can have a credit score to 800, but if your debt to income ratio is at 60%, they're going to say that's great. You've got an 800 credit score, but you're kind of already mortgaged to the till there. Like, yeah.
Yeah, so we have some clients who have never borrowed. They maybe had a mortgage for $100,000 15 years ago, but cash is king. So they pay everything cash, and their score is 820. Great, right? But they have a 60% debt to income, like you say. There's nothing we can do with that. And because they're not showing the ability to repay, they're living outside their means.
Right.
And again, the boat goes first because it's a luxury item.
Right.
You
exactly.
and I don't agree, but that's the lender's position.
Right. Exactly.
Right.
Okay. And then that kind of talks a little bit about the bare requirements, kind of what you need to secure marine lending. What are we looking at usually in terms of like length of the loan? Like what, 5 years, 10 years, 15, like what in general, obviously.
Right. So our longest term is 20 years, and most of the clients take advantage of that because that brings the payment down. You can prepay for sure and make principal payments. It doesn't change the monthly payment, but it does reduce the principal that you owe and shortens up the term of the loan. Most of the lenders, if the boat is limited charter or full-time charter, they'll take that term from 20 to 15 years because of the additional risk associated with the additional use of the vessel. And if it's in a charter company, that would be another reason for the shortening of the term. The other reason for shortening of the term would be the age of the vessel. So let's say you take a 1999 boat. Well, that boat's already 20 years
right.
old. So does it make sense for the bank to give a 20-year loan? Because by the time it all pays out...
40-year-old, yeah.
Exactly. So we'll get a loan term that's probably 10 years, maybe 12 years on a boat that old. And if the customer qualifies, we just had one on a 1996 boat, they gave him a 180-month loan, which is 15 years. The gentleman had 2 prior boats before. He showed good liquidity, and debt to income was a little close, but they still did the deal for him.
Okay. No, that's perfect. That's good to know. So you just kind of touched on using the example of like a 1999 boat. So can you just talk a little bit more about like age of the vessel and like what, now granted most catamarans that are on the market are not older than, 20 years old. There are some boats in the 90s that people ask about. So how old of a boat can you finance?
So the general rule is 30 years. And if the boat is a very good brand and if the survey is very good, we can look at that on a case-by-case basis over 30 years. The bank reserves the right to increase the rate because of the additional risk based on the age. We received one, and all the bank's parameters are different. So that's part of what we know is we have our array of banks. So some banks will say, okay, we won't touch this if it's 15 years or older. And then these 3 over here will say, we'll touch them, but we'll add additional for the risk if we approve it. So another benefit of coming with us is that we know who will touch what. So it doesn't behoove us to go over here and pull the client's credit if we know they're not
right.
going
You already
to
know
do
that
it.
they're not going to do 20, 25, 30-year-old boat.
Exactly. So, being in the business as long as we have, we're going to say, okay, we know not to go there. We're going to go over here. But we counsel the clients in advance. We let them know there's going to be a rate increase versus quoted rates that are out there because of the age of the vessel.
Okay. No, that makes perfect sense. The next question is, and this is probably a good segue into that. So one of the y'all on YouTube asked, can you roll a refit or upgrades into a yacht? And so if it's an older boat, chances are after you purchase it, you're going to need to make those upgrades. Is that a possibility or an option?
So it's a tough one. So we had one recently on a very large catamaran where the client was buying it and he wanted to make $250,000 in improvements. So he was able to qualify for it, but what we had to do is we had to show all of the work orders that were signed by the customer that he would do the work. We held the $250,000 back, and after he did the stages of the work, had the surveyor go out, show that the work was done, we released the money accordingly. Okay,
but so if you're buying let's say a Lagoon 450 or kind of your standard cruising boat, and you want to add put a new water maker in, new sails, new standing rigging, it's probably something that lender is not going to be interested in doing.
Correct.
If it's a 100-foot sailing catamaran.
Much larger.
It's a little bit different story there. Then.
Yeah. We really encourage at that point, we'll look at the lenders that we have and say, this one will give a little bit more from a down payment standpoint or a liquidity standpoint, knowing that you want to do these improvements.
Right.
The other concern with improvements is the survey. So if it needs to be improved that much, your survey by a NAMS or SAMS certified surveyor may not come back the way you want it.
Right.
So that leads into that question.
So talking about survey a little bit, I know that the lenders.
I don't want to talk too much about it.
No, but the lenders will review the survey, which is why it's important to use an accredited marine surveyor. But this is kind of a good segue into the purchase process, which I've done videos on that, and if you guys have questions on the purchase process, please let me know. But from a lender's standpoint, what does the process look like from initial contact through finding the boat, through going through the survey to closing, and what does that look like? So if you've stuck around and watched this much of this long video interview, you're probably wondering why you're looking at me now and not Noelle and I, and it's really, really simple. I didn't know that the Sony the Sony camera will only record 29 minutes at a time before you've got to stop the clip and re-edit it. So the second part of the interview was not actually recorded. Luckily for us, Noelle has agreed to sit down with me to kind of reshoot that bit, finish it, as well as answer some other questions. So if you do have other questions on marine lending, please leave a comment down below, shoot me an email, shoot Noelle an email, and when you're ready to make a purchase decision, please give me a shout.